Mining Network's coverage of the WNS is brought to you by GoviEx Uranium.
Hello, welcome back. We're at the WNS and I'm with Ciampaglia, the CEO of Sprott Asset Management. John, good to be with you.
Yeah, thanks for having me.
More than welcome. Look, you guys are probably one of the most spoken about names in uranium, especially since you set up Sprott 4 years ago. I think the sentiment around the uranium space is now really perceived through what's going on with your product. What was the rationale to begin with setting up the Sprott?
Yeah, I mean, we had a very simple yet constructive thesis on uranium back in 2019 that indicated that if we didn't have higher prices of uranium, the lights were going to go out. That was our, big picture, simple story. It was really about a structural supply deficit. We entered the market in July of 2021 with Sprott, and we obviously have a whole suite of different offerings in the uranium mining space right now. And our view has become even more bullish given nuclear is now being seen as a solution for energy security, national security, grid stability, AI, and decarbonization. So the story has gone from a very simple supply deficit to now supply deficit plus growing demand profile, which no one even talked about 2 years ago.
Obviously, at the moment, Sprott are really in the market, hovering up any excess supply in the spot market, right? How do you see your role evolving moving forward in the uranium space?
Yeah, I mean, uranium, I was first off by saying it's not an easy sector to invest in. The sector is still going through kind of a recapitalization phase. So we talk to a lot of big institutions that say, hey, we love this investment thesis. We think it's kind of a mega trend, but it's hard to get positioned because there aren't that many liquid large cap companies. And I think the Uranium Trust has been able to attract a lot of institutional interest over the years because a lot of investors have said, I want to just play the commodity side of it. And sometimes they use it as a complement to the equity positions that they have. That's, I'd say, probably the most widely used case. But as the vehicle gets bigger, I think what we're seeing is more and more generalist investors are getting involved in the sector. And it's still, in our mind, kind of in the early middle innings of this bull market.
Interesting. We had an interview with Rick Rule, obviously someone that you'd know very well. He was sort of almost saying that now the spot market is almost like the spot market, and the tail's wagging the dog in a way. Whenever you're raising money, whenever you're in the market, really the movements and anticipations of what you're going to do is really affecting the spot market before you even do it sometimes. I guess the main thing with you guys is, if you weren't there 4 years ago buying up the excess supply, if you haven't been doing that, obviously I think you're almost up to about 70 million pounds now, right, that you have in inventory. Do you think there would have been a longer delay in terms of the excitement that we're seeing even at a conference like this if you didn't do that 4 years ago?
Yeah, look, I mean, we saw the opportunity, as our investors did, that the price was just uneconomic. I mean, uranium at $28 a pound a few years ago had most of the best mines in the world on care and maintenance. And if this industry wanted to grow, you need to have a reset, and part of that reset is the mining companies needed to have a viable price to actually invest in projects. So I do think the trust has had an important role to basically create price discovery and incentivize, move to that incentive price where we've seen major mines reopen. We've seen new projects finally moving forward after being stuck for many years. So I think it's helped in a whole bunch of ways. And, the vehicle is very transparent. I think that's one of the reasons why investors have flocked to it.
Yeah, and we were talking with Per earlier, he was mentioning that it is very much now a seller's market. What's it like for you guys at the moment? What's the liquidity like in the spot market? How easy is it for you to now go out and acquire more pounds as this market starts?
Yeah, well, the spot market in uranium is obviously a much smaller market relative to the term market where utilities are buying, and it is opaque. So it's a discovery process that we have to go through. We hadn't bought any uranium from November of last year till I think June of this year. So it was a long period where we just yes, we're following all the trades and monitoring market, but until you actually have money in your hand and you're engaging with sellers, it's really hard to get a sense of the market. So in June, we obviously started buying again, and we were able to buy about 2.5 million pounds. There's always material in the market. Even though a market can be in a structural supply deficit, there's always mobile inventory. There's pounds that have to come, into the market from offtake agreements and find ultimate homes. So we try to find those pounds first and foremost. But it's changed dramatically in the last few years. There would be times, say 3 or 4 years ago, where we could buy 1 million pounds in a day.
Wow.
There was that much material kind of floating around. It took us almost a month to buy 2.5 million pounds. So it's different. I mean, the material's there, but it's not as plentiful as it used to be.
Do you see this as a potential issue moving forward in terms of the amount of pounds that are available on the spot market? And as we are starting to see these supply deficits potentially moving out towards sort of 26 through to 28, I guess, I think you guys are capped at what, 9 million pounds per annum, right?
9 million pounds this year. Next year, I don't know what that number will be, but for this year, it's 9 million, and I think we're at 2.5.
You're at 2.5. Is the ambition to max out the 9 million? Or?
We would love to. I mean, obviously, it's not our decision. It's really a reflection of what investors want to do with their capital.
Yeah.
If they want to push the vehicle to a premium to NAV, then we will absolutely issue new equity and buy more physical with it. Up until recently, investors have been on the sidelines. They've obviously been very distracted with all of the uncertainty in the market related to tariffs, trade relations, Inflation Reduction Act, what's going to happen with Russia and its role in the Western nuclear fuel supply chain. A lot of that uncertainty is starting to dissipate. We see short interest in the sector starting to come down, which is very good. The trust is trading better, and I think investors are feeling a lot more constructive now.
Welcome to GoviEx's Montanga uranium project. It is right next to the Kariba Dam, a 4-hour drive from Zambia's capital, Lusaka. It has great infrastructure, benefiting from road access and proximity to power lines. Zambia is a pro-mining country, and we have the support of the government for our project, which is going to be Zambia's first uranium mine. Our Montanga project is already mine permitted, and it is a simple open pit heap leach operation.
The feasibility study is complete, and we have filed the ESIA and relocation plan. GoviEx has recently announced a reverse takeover of Tomador Iron, which will result in an Australian listing, a new name, Atomic Eagle, a strengthened balance sheet and corporate structure in a market that knows Africa, supported by a proven uranium team.
Yeah, so this was something that Rick was talking about, is that almost, if you want to get a real sense of what general sentiment is for the industry, you sort of almost have to look at the spot product now. In terms of your inflows coming in, I think you raised about 200 million not too long ago, didn't you? And then I think it's almost like a rolling capital raise going on at the moment, is it not? Where if there's interest, you can bring more in.
Yeah, absolutely. I mean, we've had an at-the-market capital program in place since 2021.
Yeah.
And that, at times, has been really, really active in terms of raising capital.
Okay.
In the last few trading days, it's been active again, which is nice to see. I think that's a really good reflection of an investor interest. And we're taking advantage of that, and we're buying more uranium. So the last few months have really perked up for us after, as I said, that period from November to May was kind of, there's a real overhang in the market.
In terms of when you're having conversations with the institutions that are buying the spot product, how much more confident are you now that we're entering a period where the uncertainty is unveiling and we are going to see increased demand for the product?
Yeah, I think the sentiment, just talking to investors the last 3 days here at the conference, it's really, I'd say, constructive.
Okay.
And I think it's for a few reasons. One, they're looking at the longer term fundamentals, all of the really positive energy policy related decisions that governments are making. So that's really positive, but that doesn't have an immediate effect on the market today. It's going to help the industry kind of revive itself after a long hiatus. But I think in the short term, what the market is responding to is certain announcements that we've seen from a number of producers, including some of the incumbent producers in the last couple of weeks, basically signal that they're having production challenges. And I think that is also sending a signal to investors that hey, even if the commodity price were to go up another $10 a pound or whatever, the supply response may not be as fast as the market would like it to be. And then that's just because the industry was shut in for many years. It's hard to kind of resuscitate some of these projects. Some of the greenfield projects were discovered 10 or more years ago, are finally trying to get to market, and we're very confident and hopeful they will. But mining is a tough business, and uranium mining has extra challenges associated with it. Permitting times are quite long, and so the supply response is happening, but it's happening with some bumps along the way.
Yeah, definitely. And obviously one of the main things that we're hearing with the junior and the developers is that they really want to be seeing sort of closer to $90, $100 uranium before they actually make a final investment decision on these projects. Do you think we're close to that becoming a reality in terms of pricing?
Well, we're right around $76 in the spot market, but again, that's not driving utility, contracts, and it's obviously not where producers are selling. So if you look at the term market, we obviously have much higher pricing there, which is obviously structured more in a collar structure. But I think we're moving higher. And if you look at the last bull markets, it was higher for longer, and that was really what the industry needed to make those kinds of capital investments with confidence to basically build out a lot of extra capacity. It's not just mining, it's the processing of fuel, it's obviously building new power stations, extending their lives, restarting power stations that were closed. I mean, a lot of interesting things are happening right now.
Yeah, true, and especially on that point of obviously it's not the term market, right, in terms of the pricing, it's not necessarily a reflection of what the mining companies are getting for their product, but when it does come to negotiation on long-term pricing, they do often then look at what's happening on the spot market as a reflection point, right? So I guess the thesis is if the spot market can sort of climb up and up and up, we should, in theory, the utility companies are going to find it quite hard to justify why they shouldn't be paying a higher price in these longer term contracts.
Yeah, I mean the spot price, and the term price, they largely kind of move together.
Yeah.
The spot price moves usually quicker, and at times the spot price can kind of race way ahead of the term price, and then there's kind of a correction back, which we've seen. So, there's kind of an odd relationship at times, but they should be moving together. And one of our fundamental beliefs was earlier in the year when the spot price was $63 and the term price was at 80, we were like, that just doesn't make any sense to us. In a market that is structurally in a deficit, how could there be such a wide dispersion between those two marks? And sure enough, as the sentiment has changed, you've seen those prices converge. We expect them to converge even further, and we would expect the term price to start moving higher because it's been stuck where it currently is for some time now.
But do you think because the spot market has always been very opaque, and whereas you publicly share everything that you're doing, and there's a lot more liquidity and volume through the spot market now, is what you're doing really, do you think what you're doing is having an influence on potential contract negotiations that might be going on at a conference like this behind closed doors?
Yeah, I don't know. I mean, those contract negotiations are highly confidential and bilateral in nature. I have no idea. But, obviously a lot of secondary material has been removed from the market, not just by us, but by other vehicles.
Yeah.
Our position is in every commodity you have end users and you have speculators and you have intermediaries. They all have a role to play in terms of liquidity and market structure and price discovery. So I think our vehicles help improve the liquidity and the transparency of the spot market. We report all of our transactions to the pricing reporters, which is voluntary.
Yeah.
You don't have to do it, but we do it because we think it's actually very beneficial for market participants to know what's happening out there. And so I think a lot of industry players have said to us, the way you operate in a very transparent fashion is really appreciated.
What do you think are in terms of your fees, obviously you mentioned at the beginning there, if there wasn't enough nuclear power, if there wasn't enough uranium, the lights wouldn't stay on, and it's something I've heard Rick say over the years many, many times. What's your thesis on the outlook for uranium sitting here today? Say, for example, we're sitting here next year, where would you expect us to be relative to now?
Yeah, I mean, that's obviously very difficult to predict, but it feels as though the price got a little ahead of itself.
Yep.
In 24, it kind of got, kind of disproportionately beaten down around, Liberation Day in April. It's clearly found a more solid footing here, and it feels like it wants to start to creep up again. You know, this is typically the time of the year, you know, seasonally, where the uranium price starts to wake up after people come back to work and start thinking about their investments. So we're kind of constructive between now and the end of the year. I do think we're going to see more convergence between spot and term should start to move higher.
Okay, good. And what does the outlook look like for spot, do you think, in terms of buy-in? Obviously, you raised the 200 million, you've still got this revolver. Are you anticipating that you could max out that 9 million this year?
I think that would be very hard to do. I mean, 9 million is you know, equivalent to a lot of dollars these days versus a few years ago when we were buying uranium at $30. But you know, we're just happy that we're back in capital raising mode and you know, being able to take advantage of the current prices, which we think are very, very compelling.
Yeah, well, I hope you do get the 9 million figure. But John, I really appreciate your time.
Yeah, great to talk to you.
Thank you.